voice then for the markets. Amisha Vora, Joint MD. Prabhudas Leeladhar joins in with that. Amisha, hi, good to see you. And I'm going to actually take this point forward with regards to Sushma Swaraj's comment, where voting on FDI is a precondition for Parliament to function. That's the big domestic queue that we're working with. What are your thoughts with regards to this particular comment and what we could see from the winter session as a whole?
I think that from the market perspective, the recent softening or slide has also been due to, and largely due to, some of the fears that as the winter session approaches, the heightened political activity and non-action on reforms will continue. So that is one aspect to keep in mind, that market is worried about it. But on fact-checking, it so appears that Congress continues to show a lot of optimism, and I believe that's mainly coming from the fact the kind of support they could have been banking on from SP, BSP, and which is how even the opposition is asking for a vote rather than the other options. So it appears that while the noise will be too much, but it should go through. That's what is the current understanding with which we are working. And also, the noise will be so much that some of the other action might in the process get delayed, which also will be equally costly for us as a country. But we are going ahead with the assumption that this will go through. At the same time, the debacle of the government will not happen in this session.
Amisha, what are your expectations? One, you indicated that you expect FDI in retail to go through. By way of other bills, what could we expect from the winter session of the Parliament which could get cleared?
I think, we've been for last almost, if I'm not mistaken, 7 parliamentary sessions going so high and dry, and nothing actually gets delivered. And whatever action has all happened between the sessions. So while a lot of bills need to be put up, needs to be cleared, I think by the end of the session, if they can manage to get at least 2 or 3 of them done, that will be a good achievement. Particularly something on banking and pension side. If that gets touched upon and get done, that will be a very positive development, I would think, from the kind of track record that has been there for a while and the overall scene, the way it has been casted.
Amisha, we've been pretty much range bound in this 5,500 to 5,700 odd mark intermittently, obviously, in the past couple of weeks. If in case the winter session does not come about as expectations and does not go through as per expectations, would you see further downside below the 5,500 mark for the Nifty?
I would think that the downside, we can see the markets up to maybe 5,300 levels, not impossible. And I think beyond winter session also, for the market to break the upside, would need something like a GST which can really prove to be a game changer, which can really lead us through and cross past that 5,800, 850 kind of a thing. So I think till then, the next big step, we will continue to hover in a smaller range. With, of course, as what you say, some major negative being, something happens to the government. In that case, divestment gets further delayed, fiscal deficit will continue to look large, and rupee will continue to slide. In that case, I think 5,250, 5,300 could very well be a possibility.
Speaking about it, Amisha, when there is so much uncertainty in the market, tactically, what's the call or the recommendations that you would, have on your portfolio? Would you recommend anyone on just for a very short term go long on a couple of sectors or perhaps book profits in others? If you could give, the tactical view on the markets now. by way of a portfolio?
I think on a slightly medium to long-term basis, the pockets which are under extreme stress probably would be the pockets which will make money for investors. I'm not saying from traders' perspective. So the two pockets which are under extreme stress is definitely the entire infra space, where interest as a cost to sales is ranging from anywhere between 7-8% right up to 20-22%. And of course the working capital cycle has elongated from almost 65, 70, 80 days to anywhere between 140 to 160, 180 days. So I think these two combined is really, leaving nothing for the bottom line, or rather negative. So that's a very stressed sector, both from perspective of the fundamentals as well as prices. And the reflection of that, as well as the slowing economy and high interest cost, on the other end is on all the banks, and in particular largely all the public sector banks, which is also to some extent gathered in their price to book multiples at which they are gathering. So I would think that there are two ways to look at it. Either the things don't, in terms of reforms, don't move forward from here, the fiscal deficit continues to be pretty large, and these sectors which are any which way suffering will continue to be in bigger trouble. But in case that happens, then I think that the domestic consumption story, which is so prettily going ahead in last 2 years, cannot sustain, as both the salary as well as non-salary income will come down in the economy. So I would still say that this has to bounce back. The troubled pocket needs to bounce back. Government as well as the overall inflation needs to support the lowering of interest rates. So from a 12 months perspective, I think these are the two pockets where money will be made. In between there will be pain. Yes, there will be pain. And probably for a quarter, the things will look much more dismal, not impossible. On the other end, for a complete portfolio strategy, I would say as a barbell strategy, you still need to be in pockets of safety, which are maybe a pharma and some of the other in domestic consumption space, right from somewhere in autos to other domestic consumption, which is not so very highly priced. So I think a combined strategy will get, over a slightly medium to longer term period, much better returns.
All right, Amisha, thanks very much for joining in.